Now, earlier today, Scott had sent me an email. I just want to cover this very quickly, related to what's called the picks of the day tools for covered calls, for naked puts. We've even shown a bull put credit spreads kind of as well. So what are these weekly picks of the day and the monthly picks of the day? Well, this is sort of Ernie's best foot forward, our best foot forward after Ernie's exhaustive testing, 75 to 80 different iterations. Let me go into the covered call search screen. Oh, shoot. I'm sorry, search. There we go. So each of our search tools in any strategy, you've got access to over, 35 to 40 different option criteria, 20 to 25 different stock technical criteria, 15 to 20 different stock fundamental criteria as well. This weekly picks of the day, you see that we have a variety of different options criteria. When you go to the search, you can see exactly what's being used. Applied volatility, less than 1. There's that example we just talked about. Of course, days to expiration, that's obvious. Percent if unchanged minimum, bid-ask spread, theoretical probability assigned greater than 65, 1 result per security, some basic liquidity. Average stock volume, greater than 500,000 shares per day, stock trading above its 20-day moving average, and a positive MACD over the cross signal of at least 1. Avoiding earnings between now and expiration, and avoiding leverage or indexes and ETFs. So of all these criteria available, why these? Well, Ernie went through the daunting task a few years ago of running all different things. What if we use a higher implied volatility? What if we look for the higher percent implied volatility range? What if we go out of the money? What if we just focus at the money? What if we go in the money? What if we look for a higher bid price? What if we ignore percent bid-ask spread? What if we look for lower probability? What if we use delta? What if we used Bollinger Bands? What if we used number of days of stocks above the SMA 20, SMA 50? What about RSI? Putting all these different numbers in and running these tests over a 1.5, 2 year period with the same allocation, just to see, and when using stops, not using stops, different approaches, things of that nature, just to see over time which criteria set gave the best return for a monthly or weekly covered call or a monthly or weekly naked put position. And this criteria that's shown here, weekly picks of the day, default, monthly picks of the day, is what's being used to identify the position. Here we're looking for a positive MACD. The MACD has to be above the divergence line, as does the signal line, and the MACD has to be above the signal line by at least 5 days, while still having a stock that's above the SMA 20. And he found in this case, monthly long-term, using the broker recommendation actually helped the results, where it didn't in the weekly because it's a shorter term. Most people aren't focused on the longer term, but longer term, you wanted much more, as I said, that positive broker recommendation, buy or a strong buy recommendation, of course. Now, Scott's question was, a few days ago, I opened stock AUPH on the monthly covered call picks of the day. This is weekly. Oh, no, this is the monthly. And he said, it no longer appears. So does that mean you guys closed the position and it's no longer available? Well, what Scott was looking at was the quick view. This is the search tool where you can see more than the 2 or 3 pre-selected results that match the criteria at one time during the day. So today at 11 a.m. Eastern time, that search was run and it popped open the 3 results that offered the highest return for that monthly covered call picks of the day, ENVX, MAXN, and EGO. So what Scott was asking is, one day he ran this position, this pharmaceutical company, AUPH, came up. He bought the stock at about $9.67, I think it was, and sold the 8-strike call for $1.93, I think I wrote down. It was roughly a 5.3% return on the position if he's assigned. Now, see here, kind of like Maxi and Solar here, about the same thing. Different prices, 24.10, selling the April 20 call, midpoint between 480 and 540 would be a 5.3% return if assigned. A $1 midpoint time value. Now, AUPH is not here. It's not in the monthly covered call picks of the day. So he's asking, Does this mean you guys closed the trades? I didn't see an update on that. Ernie and I are not entering these trades on a daily or even monthly basis. We're not necessarily, Ernie still trades covered calls and he still trades naked puts. I do use cash secured naked puts from time to time, but I like to focus on the bull puts a little bit more, as Fawad pointed out. This is our best foot forward. If you want to trade covered calls and you want guidance into what we think would be the best strategies to open based on what's worked over time, that's what these monthly picks of the day and weekly picks of the day are doing. We're not opening these positions every day that come up in the search. We're not necessarily even opening monthly or weekly covered calls or naked puts based on what our market conditions are, what we think the market's doing. It's a guide to help you with ideas based on what we saw historically with testing and in actual trading seem to work best over time. Slightly in the money, not taking that high implied volatility, looking for that higher inflated return because they tend to fluctuate more against you, looking for the technicals that match the sentiment of the stock. Bullish positions above their 20-day moving average, positive MACD ranges, things that the stocks we'd get into if we were doing. Yes, if I'm going to open a monthly covered call today, I'm going to look for new covered calls following an expiration, I'm starting right here. If I'm going to do weekly covered calls or weekly cash secured naked puts, I'm starting right there. But it's not as though we entered these trades, and if you saw a trade on a Monday morning following expiration, so on March 20th, I pulled this up and I saw that AUPH position, and then 2 days later, I didn't see it in the list. That doesn't mean this is a position we open and then close, and that's why it's no longer in there. This is a trading idea, and you can always research and analyze it further going right into the search. And there's the MAXN. There's the ENVX. You can burn it down to more details, select more columns. Most importantly, you can take a look at the stock chart, company information, evaluate the profit and loss chart, and the what-if scenarios, as we just did with the married put and the bull put comparison for Fawad just about 10 minutes ago. The detailed research for the stock and option, see historical option changes over time since the option has been released on the market. Now, related to Scott's question, what happened was, remember, our criteria are looking for positions for this particular search where the MACD is positive, the signal line is positive, and the MACD has crossed the signal by at least 5 days, the stock's above the 20-day moving average. Right away, I can see why something wouldn't have matched. That's going to be the thing that's most in flux in a choppy market, as Fawad mentioned. Doesn't mean it was a bad trade to get into. Doesn't mean it's still not a good trade because the stock's at 1031. Scott's now at a better probability of getting assigned at that 8 strike price at standard April expiration and seeing the 5.3% return. But the way that we set up the charts, you've seen this before. If you get on a coaching session with Ernie, you get on a coaching session with myself, and you say, how do you set up the charts? Well, this is what we do. Ernie might be 6 months. I usually look at a 3-month. What do I have here? The SMA 20 selected. Why? Because most of the strategies I'm doing, bull put credit spreads, the married puts, maybe somewhat of the cash secured naked puts, weekly or monthly picks a day, we're looking for stocks trading above the 20-day moving average. But the main reason the 20-day is there is because we also like to look at the Bollinger Bands. Maybe looking for what's called a Bollinger Band breakout, where the stock closes one day above and the next day above the upper Bollinger Band, which basically it's a 20-day Bollinger Band average, which is usually an indication of an increase in price. Now, it usually waffles down after that, but this is what Ernie looks for, and you can actually see that for the Bollinger Band long call screen. And of course, the put screen is looking for the Bollinger Band breakout to the downside when it drops below and closes one day and then closes below the next day also. Now, below that, we have the MACD. As you can tell, I like to use that for my stock selections personally. I'm not saying it's the best one. Many of you may rely on stochastics. Many of you may rely on Fibonacci. That's great. Find the pattern that works for you for the strategies you're doing. But as a gauge, this is what we like to look for. When Scott entered the position, this is what we call the divergence line, the black line here. The red line is the EMA 9, the 9-day exponential moving average. That's what's the signal line. This is the divergence line here. This is the signal line. And the blue line is your 1226 MACD. So bullish positions, we look for ones where the MACD, has been above the signal line, the red line, for at least 5 days. So somewhere in this time frame, I think it might have been around here, but it could have been here, is when Scott got into that monthly covered call position. Why is it not showing up anymore? Is it because it was a trade we were in and we closed? No. It's because there was a dip. I know it's hard to see. Try to isolate that by going the last 30 days or so. See if we can get a better view for you. Instead of 3 months, let's just go 1 month. There it is. Okay, so even here, although it's getting close, this has been above the MACD 1226 has been above the EMA 9 or the signal line for more than 5 days. In the last 4 days, there was a pullback on the stock, and that was no longer occurring. So even though 1226 MACD and our EMA 9 red line is still above our divergence line and still positive, that's what the positive means, that it's above the divergence line, it's no longer 5 days above the MACD, I'm sorry, still longer 5 days above the signal line. That's why AUPH is not showing up in that search anymore. It still has the return. It still has a good return. I'm not saying it's a bad covered call to trade, but on this pullback, when the stock fell back down to $8.75, $9 range, remember, he's got the 8 strike call, so he's still looking pretty good in this scenario. Hasn't breached the short call strike price yet. Maybe has dropped, that 7 or 8% from when he got in at 963 or something, was at 975. It's about 90 cents. It was almost about a 10% drop. We're talking about a smaller price stock, of course. But again, that's why it's not matching. It's not to say, okay, it's not matching, so it's not maybe a position we would get into. Doesn't mean it was a bad position at the time. It's just saying there's probably better positions going forward. I just wanted to be clear on that. Make some clarification on the picks of the day. And of course, as I mentioned, you can delve deeper in that. So if I go to the monthly picks of the day, you see the quick view here, just updated once per day. You want to see more updated trades following that criteria that were tested, traded, whatnot. I should say, then absolutely just go into the search tool for the strategy and select the weekly or monthly picks of the day, and you'll see the specific criteria that are being used. Going back, you want to see more details on what was done, how this was developed, and what stops you might consider. Click on the text link for See How We Developed These Results. It'll walk you through the basic introduction, what were the original target amounts and what we were looking to achieve, how the technicals were done, the fundamentals, the back test process that was used for these positions, and the allocation, very important also, and what stops, of course, were used, if stops were used. Sometimes stops weren't used, sometimes they were, depending on the strategy. Sometimes stops can hurt a strategy performance, sometimes they can drastically increase it and prevent you from, of course, getting into too far gone with those leveraged spread positions, the credit spreads, debit spreads, condors, and so forth. So that gives you the more details, but these are not trades we are entering on a daily basis. These are not positions at 11 a.m. I go right in and see the top 3 monthly covered call picks of the day and open them. I probably would have done fairly well, but as you guys can tell, remember, most of that portion of my portfolio that's the capital intensive is devoted to married puts and the collar positions. I use that smaller portions for credit spreads, bull or bear, the diagonal calendar spreads, the poor man's covered call that really is on stocks I can't afford to do as a covered call, cash secured naked put, married put, or standard collar position. And I like to place some long strangles on broad-based indexes and ETFs from time to time based on market conditions. Maybe doing a strangle or just buying a put and then legging into a strangle, and maybe the retail ETF if it's looking bad, or if the retail ETF is looking strong, buy the call and then convert it to a strangle. But strangles on, SPY, QQQ, RUT, and just move the strangle up and down as the market moves, or if I see the market sentiment tool change from bull to buy or buy to bull. This is based on our extensive testing. This is our best foot forward. That's really what this is. What we would do if I was opening a monthly covered call today, this is where I would start. If I was opening a weekly covered call today, this is where I would start. But just because something appeared today, MXN, and it doesn't appear next Wednesday, that's not an indication that this is a trade we got into and we're no longer trading it anymore, so we've exited. This is not an advisory service. This is not a portfolio. Best foot forward, where we would start if we were opening positions in these strategies today. And of course, these don't seem too risky for you. These seem a little bit too volatile for you. That's what the search tool does. We can go into the search. You can scroll down below the results, the full results, not just the top 3 that appear, and you can customize this any way you want to. I want implied volatility, let's say, of less than 0.75. I still would like this other criteria here, but maybe I'm not going as deep in the money. Maybe we're only going 6 or 7% in the money. I'm still going to keep these technicals here that we wanted, but I'm going to do some different fundamentals. I'm only looking for stocks that have at least a 5% earnings per share growth, maybe a PE of less than 60. I know that's high, but that's what the market conditions are offering. And hey, I only want mid to large cap stocks, so let me put in a market cap of 2,500. Now, I don't even know if this is going to pull up anything because of the high return. But now we've got some different stocks. Academy Sports and Outdoors. That's the Mary put I opened yesterday. I like that stock. I'm not saying it's a covered call recommendation, but reasonable return for a 28-day trade. April 60 strike, going for about 660 midpoint on a 64.95 stock. Pinterest, Amazon, Wheaton, General Electric, Pan American Silver, C Limited is always an interesting one. DoorDash, I don't know if I would use. I think they fluctuate too much with the market and demand and the economy. But hey, they're looking strong and they're looking good recently. So I've narrowed down that results to stock. You might not have recognized any of those top 10 stocks when we first opened the default monthly or weekly, or this was the monthly covered call screen. Just 3 changes. Lower implied volatility. Not going as deep in the money because I might not get the return I want with those types of stocks. Looking for good management, a good relative PE in this market, mind you, and mid to large cap stocks. You got a list of 13 stocks where I can guarantee you know half of the names off the top of your head. You know DoorDash, maybe you don't know Academy, I do. Pinterest, Amazon, Old Silver Wheaton, okay, General Electric, Pan American Silver. Some other ones I've never heard of. VIP Shop, I know that was a low price Marriott put I was looking at recently, but I decided not to go into that one. I decided to use the more money to go into ASO, actually. They're not related at all. They're completely different companies, but it's just a decision I made the other day. But that's how simple it is to use the tools. And that's what the picks of the day are designed to do. They're starting points, idea generations, where we would be starting if we were opening a strategy today, a position today, I apologize, in that strategy. You want to delve deeper? Check that link on see how we develop these results and see if it's something that matches what you're trying to do with this strategy in your portfolio. You don't like some of the stocks that you're seeing? Make some simple changes. Just go into the search. Pull up that default screen. We'll go to weekly picks of the day. And again, we see some of the same stocks because, of course, it's using similar criteria, but we're just shorter term. Well, that applied volatility restriction's already there. Yeah, I'm going in the money. Probability's good. Technicals we liked, stock above the SMA 20. And 1 day above the MACD, I could increase that too. Maybe I don't want something with a too high of a beta, but let's do our other ones. Let's just say I want to see effective positive management, 5% earnings per share growth or more. Again, relative PE for this market of less than 60, market cap of 2,500. We know C Limited is going to be there. Asana, Snap, Shopify, C Limited, CrowdStrike, Tesla's in there, Yeti, Intel, Netflix, Newmont. These names are about 75% familiar to me. Probably you too. So there are tweaks that can be made. And it's not to say that, yeah, I can't say that, making those changes is going to improve it. What earnings testing did. I'm not trying to say that at all. What I'm saying is that if you're using that for ideas and you don't like the positions, I just showed you 3 quick changes you could make for the fundamentals to be a little bit more secure, a little bit less volatile, and see more company names that you recognize on a regular basis that might be of interest to you for a good 5-7 day return on a weekly covered call position.